Oh my gosh, Henry, your QQQ CCs are in the money. Man, your covered call is going the wrong way. You're losing money. Something's going wrong. Oh my gosh. All right, let me explain. Let me explain to you guys what is going on with my QQQ position, because some of you guys seem to have forgotten how a basic covered call works. So in this video, I need to educate you on what a covered call is and how it works, okay? You guys already know that recently I made a $1.5 million trade on QQQ. So let me show you what that looks like, okay? When I go to positions, you will see right here that I have a 1.549757 cost basis for QQQ. I bought 4,200 shares and I ran the covered call strategy. Now, this is going to be really interesting because many of you believe that I am down money because my QQQ covered call right here is in the money. You can see right here, it says in the money. But what is actually going on? Well, to some extent, I sort of messed up, but to another extent, I've made money. I just didn't make as much money as I could have, but I have certainly not lost money. In fact, my account continues to go up. It's at 2.16 million right now. So this is what happened. I bought QQQ, okay, because I wanted to put my money into an ETF. Now I was thinking about doing Apple, but I decided on QQQ. The video will be down in the description. And what happened to QQQ this week is that the stock actually went up quite a lot, okay? And what happened to QQQ this week is that it had a rise of 2.6%. And this small rise in just the past 5 days has actually led my covered call to go into the money. And here's the thing, that isn't necessarily a bad thing, but it does mean that I am done making money. So let me explain. Basically, and I'm going to draw you a picture very soon. Basically, my QQQ is now in the money and I sold a 375 covered call. I sold a 375 covered call for March. That means I have to wait until March 15 for this option to expire. And I collected $71,000 on it, and it's currently worth $93,000. The reason why it's worth more is because QQQ went up. But because I am short this option or I have sold it, that means that I am down. So I am down $21,490, but on the stock, I am up $39,480. So the difference between $39,480 and $21,490 is about $18,000. So in just the past few days, I have made $18,000 since posting that video, which was not that long ago. As you can see, I posted this video on November 6th and today is November 11th. So in just 5 days, I have made $18,000. Now, the bad news is I am no longer able to make any more money. This was actually a trade that was very risk averse, meaning that if the market went down and QQQ went lower, I would have a pretty good margin of safety, which is $71,000. However, now that QQQ went up, I have made about $18,000, but I'm not really going to make that much more money in the short term. All right, so let me draw this to you on a chart myself, okay? Now, mind you, my dad is actually a painter, but I am not a painter. So I'm going to be doing my best here, okay? So here's QQQ, all right? And what I decided to do was I decided to do a covered call. So my covered call looks like this, okay? This is a stock. It can go up and down, right? Or ETF, it goes up and down, right? So let's say that this is dollars, okay? This is dollars that you make, and here's P for prices, okay? So as price goes up, you make more money, okay? Let's just say this is your zero line, okay? This is zero, all right? So as the stock goes up or the ETF goes up, I am making money. However, I sold a covered call at 375. So this is 375, okay? That's this point right here, okay? Right there. So as it goes beyond 375, I'm not really going to make any money. So it stops like that. However, I got paid $71,000. As you guys saw, I got paid $71,000. So 71K was paid to me whenever I sold this option. And I had a little bit of upside, just a little bit. So now what's going to happen is I can't make any more money at this point of time on the stock appreciating or the ETF appreciating, right? At 375, it's my maximum. So although that you just saw, I had a $38,000 gain, but about a $20,000 loss, I'm up 18 grand in 5 days. But what's going to happen from here is probably nothing. As QQQ goes higher, my position will rise in value. However, my option will also go against me in basically the same exact value. So what's going to happen is on March 15, I will have my $71,000. And actually, I got paid that right away. But in the time being, I'm going to have between probably $0 to $71,000. So far, you see that I have $18,000 in gains. And that is going to continue if QQQ rises, because that means there's a bigger certainty of my option expiring in the money. And if it expires in the money, that's not necessarily a bad thing. That just means it's in the money and I will be losing my QQQ shares. I'm going to lose my QQQ shares. However, I'm going to lose it at 375, which gives me a small gain, and I get to keep my $71,000. So I'm probably going to make around $75,000. And let's take a look at that position one more time. So look, if I go into my history, I want to show you exactly where I bought QQQ and for how much. So if I go to transactions, and then I scroll down and look at QQQ. Where are you? Let's go to past 7 days. Okay, let's go to view. Again, guys, I hope that you appreciate my transparency. So I bought it for $368. So the difference there of $368 and $375 is about $6, right? Because this is basically $369. So I made $6 times 4,200. That's basically about $24,000 that I made on the stock appreciating. Plus I got paid $71,000. So that's like about $95,000. However, at this point of time, I'm not gonna make any more on the stock going up. In fact, my options are working against me at this time. But what that means is if QQQ keeps going up, I'm just gonna keep my $95,000 in total gains. If QQQ goes sideways, I'm going to still keep my $95,000 in gains. And if QQQ goes down, well, right now I have a margin of safety and I have a really good cushion, in fact. So let's say that it goes down from 378 down to 375. That would give me basically no impact at all. I wouldn't mind at all because I wouldn't be losing any money. I only lose money actually below 375. And when I say losing money, I just mean losing some of my gains. I only really lose money if you calculate my average cost minus the premium that I collected. So check this out. If you take a look here at 1.549, okay, that's what I spent, and this is how much I collected, I would only really lose money at the difference of this price right here of 368 and 17.1. So I'm going to put on screen right now 368.98 minus 17.1. And my actual break even is $351.88. So that means that if the stock, or again, the ETF, I keep calling it a stock, if QQQ goes below 351.88, then yes, I will be losing money. But guess what? Everyone that would buy QQQ right now would lose money sooner than me. On the upside, yes, I can't make any more money. However, when I got into this position, I was pretty happy with making $71,791 plus hopefully some upside, which I've already realized so quickly. So my only mistake was that I kind of miscalculated QQQ in the short term. I didn't know it was going to rise so much. So I've kind of miscalculated and I've left some money on the table. However, I absolutely did not lose any money. I've actually made about $18,000 as I have mentioned. So what are the lessons learned here? Well, a covered call is a very beneficial position in basically every single market environment. However, when the market goes up a lot in the short term, that can sort of hurt your covered call, or at least it can hurt your ego. And what I mean by that is this looks like a loss, $21,000 loss, but it's being more than counterbalanced by this gain right here at $39,000. And if QQQ like literally went to the moon, then what would happen is this would continue to be negative and this would continue to go positive, but the difference eventually would still be $71,790 or whatever I collected on it. So there's always going to be discrepancy. And as long as this goes up, that's fine. If this goes sideways, that's fine. If QQQ goes down, that's actually what I prefer. I actually want it to go down because if it goes down, that means that I have made a great decision to sell a covered call. I've collected the premium. And in the future, it's going to be a little bit cheaper for me to keep dollar cost averaging and keep buying more QQQ shares. The reality is, although I am in the money, that is not really a bad thing. And with the covered call, there is no bad things that can really happen. If it goes down, that's fine. I have a lot of belief in QQQ and I don't mind owning QQQ at all. In fact, all the money that I have and all the money that I make through coaching, I just throw it back into the market and put it into some of my stock portfolios, whether it's QQQ or Apple or really whatever. So I don't really have an issue as, although I am sort of retired, I'm going to continue putting more money in my portfolio since I can't spend the money that I make. And for that reason, the lower the market goes, the happier I am. A lot of you guys get upset that the market is going lower, but dollar cost averaging is one of the strongest strategies. It's literally the best strategy that you can utilize to build your wealth. And as stocks go lower and as ETFs go lower, that's a good thing. If this goes sideways, again, that's fine. In sideways markets, I really outperform because the option premium that I collect gives me income, whereas the whole market is standing still. So as everyone basically stands still in their net worth, my net worth is rising. And when the market goes up, well, I feel safe because I'm also making money. Sometimes I don't make as much as the market, but that's because my strategy is really geared towards lower volatility and consistent income, consistent profits. That's safe and passive. So if the market is up, 10% in a week and I'm only up 8 sometimes, that's fine, because when the market is down 10%, I'm down 4, I'm down 3, right? I am trying to minimize my downside risk. I'm trying to protect myself in case there is a adverse move in the market. So I'm always looking to protect myself. I'm always looking to make consistent profits, and I'm looking for it to be steady and passive. And I just wanted to clear that up in this video because a lot of you guys think that my QQQ is in the money and I'm somehow hurt. I'm not. Everything is totally fine.